Again, a funny one that we always see is some fruity references. You might have gone away on a stag do or a hen do and sort of owe each other money. You might have a little joke back and forth, but again, it can just raise more questions, which when we're applying for a mortgage, we just want things to run smoothly. So the more the lender comes back to us with a question, the we have to come to you, then go back to the lender, so it can delay the process. So if you know you're going to apply for a mortgage, try to keep that at a minimum.
Hi, I'm Steve, and I'm joined by David, Darren, and Rav. We're the four founders of Reside, and today we're going to have a chat about the mortgage prep, so the step before the first step, essentially, what we need to do in preparation for getting a mortgage. David's going to pick up on the first point.
Yep. Hi guys. So I'm going to talk to you about your credit file and your credit rating. So when applying for a mortgage, lenders will always judge you on your credit score just to make sure you're worthy to get the mortgage. So the first thing, which is quite common sense, is to download your credit file and get a copy of this. Now, lenders typically use three main agencies, there being Experian, Equifax and TransUnion. You can always get a copy of your credit file for free from these three. What we like to say is there's a website called Check My File, which uses all data from the three main agencies, and it lays out in quite a nice view, so you can always use Check My File. I believe there is a monthly fee to that, but you can always get a 30-day free trial, which is what we advise customers. Understanding that is important. That shows all your payment history, your credit score, etc. And this is what lenders mainly base their decision on. Stuff to look out for on your credit file is stuff like bad credit. So you might have CCJs, payday loans, defaults, missed payments, etc. Always check that your address is correct on the electoral roll. As I said, the reason we advise people to do this is people don't have any idea about what their credit rating is. So it's always good to check. If you've got stuff like CCJs, missed payments, make sure it's accurately reported, because sometimes it can be on there and it's an error from the company side or something you're not aware about. So it's always good to get that fixed before. People can have a low score for no reason, no fault of their own. You might have a thin credit file. When I say thin credit file, it just means you've got no credit at all. So you've just got your bank account and that's it. In cases like that, it's always wise taking out a credit card just to show that you've got a repayment history. Again, I wouldn't rack up a massive bill on your credit card. Just pay your travel on it or your weekly food shop, pay it off monthly. That will help to build your score. What I would say as well is don't be scared of having bad credit. There are lenders out there that we've got access to that can help you if you've got bad credit. They're not mainstream, they're not high street, so they might be slightly higher interest rate, but we work with lenders that can help you in any situation.
Cool. Anything to add, boys?
Yeah, I suppose just to reiterate on the point about making sure that your credit's in a good place. Time and time again, we do get a lot of clients that come to us saying that they've had no issues and there's not been a reason to actually check your credit report. But then we go and apply for the mortgage, and then lo and behold, unfortunately, sometimes it declines at the first initial stage. And it could be something as simple as a provider has failed to set up the direct debit correctly, and then it's just sort of gone back into a sort of missed payment. So, it's just important that we do check all these things out prior to hand before doing any application.
Yeah, definitely. Something to add is that when you get credit report, obviously you will have a score on it, and it might say it's a great score, right? It doesn't necessarily mean that you would be automatically accepted for a mortgage. There are a couple of things that you need to be mindful about when you're looking at scores, such as, first of all, having a good score is a good start, but is your data actually correct on the credit file? I.e., do you have some accounts that are still registered at your previous address? Maybe you were living with your parents, or you were renting at the time and you never bothered to change, or you just forgot to change. So check your data. That's what I would say, because 9 out of 10 times, often we find is that there are multiple accounts that customers would hold at different addresses, and that is what causes the main problem when it comes to doing a credit check with the lender, because lender can't see historically that where are you based at. So get a credit report, but at the same time, make sure your data is absolutely correct. Where you're living, are there any accounts that shouldn't be on your credit file? Sometimes, just check that your conduct on your accounts is as it's supposed to be, i.e., if you never missed a payment, but it says you missed a payment, get in touch with the provider and get it rectified. So these are some basics that I would suggest any customers, when you get credit report, don't just look at what your credit score is saying. If it's great, that's a great start, but go deeper into it.
Cool.
I think one thing I'll add as well is I mentioned stuff like CCJs, defaults and mispayment. A CCJ could be something from a parking ticket that you was unaware of. A default is if you've had 6 mispayments in a row from a provider, they'll put the account in default. A default can stay on your credit file for 6 years, so they are, if it's your fault, it's hard to get removed. Mispayments, it could be stuff like you haven't paid your phone bill or you had a phone bill that you didn't know about. So as Rav said, it's always good to make sure this is accurate. And again, if there is stuff like CCJs, defaults and mispayments, there are lenders that can help. So again, don't let it put you off applying for a mortgage if you see that on your credit file.
Point.
Something to add on what David said is, going back to my previous point on checking data, if you have a financial association with somebody, their credit history can also impact your chances of getting a mortgage, i.e. maybe you have an account with your girlfriend or your partner, but you're no longer with them, but they're still associated on your credit file, you can actually get that removed, and that can improve your chance of success as well. So if you have any association with somebody that you no longer have, it would be a very good idea to get them removed.
Yeah, good point.
Cool.
Good point.
Second point we're going to look at is deposits.
Yeah, I'll kick this one off. So yeah, just in regards to deposits, as a first-time buyer, or generally when you're looking for a mortgage, it's good to have a deposit ready, and this sort of ties in with the credit scoring and basically how lenders work within bandings. So historically, how lenders work is that if you're starting off and you want to just put a 5% deposit, a lender's going to be quite strict, and usually often your high street lenders are going to want you to have an excellent credit score. So we're talking about, as a loose example with Experian, we're talking about the high 900s. So yeah, just bear that in mind. And then it's sort of, I wouldn't say it drops off, but they tend to scale back a little bit when it comes to putting a 10% deposit, 15% deposit, and generally 25%. You're going to probably find a lender that's going to be willing to accept, the odd mispayment here and there within the last 6 years. So yeah, that's it in regards to the deposits. Rav will basically touch upon some points regarding savings accounts and what you could look to begin your deposit saving journey.
Yeah. So deposits are, simply put, is the amount of money you are putting against to buy a property, right? So you got 100,000 property, value of a property is 100,000, and you have 10,000 pounds of savings. You're going to put that 10,000 pounds as a deposit, and you're going to get 90,000 pounds from a bank, which we call it mortgage, right? Now, with deposits, what is acceptable and what's not acceptable for deposit is a huge element when it comes to getting a mortgage, right? So there are many sources of deposit, although it's very hard, but there are many sources, right? So you can start with savings, for example. Standard, simple, you save every month. Over a period of time, you gathered your savings, and that's your hard-earned money you're putting towards buying a property. Simple to say, but in current climate, it's obviously it's very hard to save, right? So how can you get into habit of? So if you are someone who wants to get on a property ladder, there's certain things you can look at, right? So for example, you can open a savings account. Simple, right? Some firms there's some companies like Plum, and there's a company like Chip. What they do is they have an open banking system. They link it with your account. Depending on how you are spending your money, they'll put aside something every single week. So without you doing the thinking, it's like, oh, I need to save 200 pounds or 300 pounds. What they're going to do is they're going to bite-size your money every week, and it will put in the savings for you. And that could eventually grow up because, you'll get interest paid on it, which more likely or so your bank's probably not going to give you any on it. So that's one way of earning some interest on it. But you can also invest that money in different stocks and shares also, right? So depending on how your appetite for risk is, you can choose where you want to invest your money. And that can eventually build up a good tangible amount of savings if you do it right, if you do it consistently every day or every week in and out. and that's what's going to build up your savings over a period of time, right? So that's one part of savings which is can be used as deposit. You can get your mom and dad to give you some gift, if they're
Bank of
generous
mum and dad.
enough.
Bank of Mum
We
and
call
Dad is
it-
quite popular.
Yeah, the bank of mom and dad. Yeah, so you can use that gift. It doesn't have to limit. The gifts are not just limited to mom and dad. Okay, you can actually get technically gift from anybody that can be used towards deposit. You just need to evidence the source of the deposit, i.e., is it the money that you're getting is legit, and is it actually a true gift, right? So you can get your uncle, aunts, brothers, friends. If you have that generous friends, you can use that, and that can go towards savings too. There are some mortgages that will allow your mom and dad to become a sort of a guarantor on the mortgage. You probably need to speak to one of us in much more detail, because there's some terms and conditions attached to it. If you don't have high deposit, or if you don't have enough deposit to buy a certain property. So yeah, deposits, very important. And there are some of the tips that you can follow, and hopefully that will help you build up some deposit over time.
Yeah. One thing I will add, just to put a caveat into what Rev said about stocks and shares ISA, you can lose money as well as earn money in those accounts. So definitely, if you use that, if you know what you're doing, so just be careful with that option.
Yeah,
But yeah,
definitely.
as Rev said, deposits are very important. They're sort of what you're providing to the mortgage, but savings and gifts are the main sort of
Generally it falls to the main
the
form
main
of-
types of deposit that we see. So if you've got generous family or bank of mum and dad, then obviously tap into that. But if not, just get saving, and then or speak to someone as well, because you might be saving, you don't know how much you need. It's always worth having a chat with a mortgage advisor just to know sort of what area you can look at, how much you need to save, so you've got that goal, you've got that target to achieve.
Cool.
Absolutely.
Next up, we're looking at bank statements. So, more importantly, bank statement conduct.
So lenders, when you apply for a mortgage, so we've covered credit score, so that gives them an overall view of how you manage your finances over 6 years. But obviously banks, they always ask for 3 months bank statements as well, so they can see recent conduct. Things to look out for is just make sure that your payments are all made on time. You're using your overdraft within its facility, so no unauthorised overdraft charges. A lot of gambling transactions. Now, obviously, you can have a bet on the weekend. Everyone likes a bet on the weekend. But if you're consistently gambling and it seems like it's a concurrent theme over 3 months, there might be some questions raised. So it's always good to just keep within your means with that. Again, a funny one that we always see is some fruity references. You might have gone away on a stag do or a hen do and sort of owe each other money. You might have a little joke back and forth, but again, it can just raise more questions, which when we're applying for a mortgage, we just want things to run smoothly. So the more the lender comes back to us with a question, the we have to come to you, then go back to the lender, so it can delay the process. So if you know you're going to apply for a mortgage, try to keep that at a minimum. Again, large transactions, they might be completely genuine, but if you've got money coming in, money going straight out, cash payments in and out, lenders will just question it. It's no issue at all, but as long as you've got sort of an audit trail and you know what the payments are for, then it should be fine.
So Don was just touching on, so David was just touching on the negative side and what lenders look for, but there's a positive spin on that. Lenders, when they do assess bank statements, they're going to want to see some positive things, such as supermarket spend, or if you use a credit card for your day-to-day living, they want to see credit card being paid off as well, and just your general direct debits that you'd see, so your utility bills, any sort of phone contracts that you're going in. So all positive things. If you've got a bank statement which doesn't really have any of that, they will 100% sort of query that, and they'll want to see basically how do you operate on a day-to-day.
It's nothing to be scared about. Just manage your account as you would normally. I'm sure you're quite sensitive if you're planning for a mortgage. Just money in, money out, just living within your means, basically. As long as they can see that and you've got day-to-day spending on there, then there should be no issue whatsoever.
Yeah,
Cool.
definitely. I think one thing to add there, which is have a read of your bank accounts, because more often or not, in today's world, what we look at our bank account is actually interacting through an app, right? But when it comes to mortgage, you're going to have to provide a bank account, or a bank statement, have a read about it. And first thing you want to check is your address correct on it?
Yeah.
Because that is major thing. because we live in this digital world, and we hardly ever have to go into branch anymore. It never occurs that, oh, I need to change my address on my bank account, and then turns out you haven't changed your account on your bank account, which again, if you look at the credit file that we spoke again before, having correct addresses will massively help. So, once you get your bank account, make sure you are still where it's supposed to be. Right?
Yeah,
So,
exactly.
living with family, but you're now living somewhere else, it's not okay to actually have your bank account registered to your mum and dad's. You have to have it registered where you currently live at. Consequence of not doing so, it may mean that lender might run a credit check on a couple of other addresses, and it may fail, right? So, yeah, get your addresses sorted.
Very important point. Also, just on the back of Rav's point, it's good to have a little look through your bank statement so you can tidy up any old direct debits or things you've been paying for years that it might save you a few quid, which is always good as well. Last point we're going to have a little look at is the documents you'll eventually need. So obviously, once you apply for a mortgage, the lenders are going to ask for a few documents. So we've gone through some basics and just noted them here. Depending on whether you're employed or self-employed, obviously that's going to vary as to what income documentation proof you'll need.
Yeah, so I'll just touch on the employed side of things when it comes to proving your income. Typically, lenders are going to want to see the last 3 months' pay slips. There's going to be some lenders out there that will say you're starting a new job and it's sort of within the next 3 months. There's going to be some lenders out there that will be willing to accept your new contractual pay as long as we can sort of evidence the signed contract. Typically, lenders will want to see the copy of the contract that's been signed by yourself and the employer. But yeah, typically looking at 3 months' pay slips from your current employer, and then say for example you get bonus income, they're going to probably want to see a 2-year history. But again, it varies with lenders to lenders. So obviously, chat to us if you've got one bonus say in the last 12 months, then there's probably going to be a lender out there for you. But typical lenders going to be probably looking for 2-year history. Things like overtime, commission. Again, lenders are going to be looking for consistency. So it might be the case that lenders might want to have a look at a 6-month track record. So these are the sort of things that you just want to just bear in mind when it comes to using not only your basic income but any additional income that you get as well.
Cool. And if you're self-employed, David?
Yep. So self-employed. Obviously, I think a lot of clients that I speak to get scared when they're self-employed. They think that they've got to jump through more hoops, etc. It can't be further from the truth. Proving self-employed income for me is slightly easier than employed income, because if you're self-employed, you're going to file your tax returns. We just need 2 documents: your SA 302 or tax calculation, as it's now known, and a tax year overview. Essentially, the SA 302 shows the income that you've declared, and the tax year overview shows that you've paid your tax on that year. So it's just literally 2 documents for them. If you file your own tax returns, you'll have a HMRC log on where you can get them yourself. If your accountant does this, they'll be able to provide them for you. So again, self-employed, that's pretty much, and that will show your salary, dividends, etc. Some self-employed, the income might be structured a bit differently. So there are lenders out there that can use sort of retained profits, net profits, etc. So we might just need your company accounts as well. But again, it's always worth speaking to an advisor. If you tell them your situation, they'll tell you exactly what documents you need, and they're always accessible to get via your accountant or HMRC.
Perfect. So we've got bank statements. We've looked at income proof. ID, Rav, do we need some ID?
Yeah.
Lenders?
Of course, with IDs, most common one is passport, right? Things to look out for in passport is like make sure it's A, signed, and B, is it still valid? Because sometimes, we haven't traveled for the last couple of years when we were in COVID area. You might not have any holidays coming planned, so you don't naturally look at when your passport's expiring. When it comes to mortgages, it is essential that passport is still in date. So passports, the second most common form is driver's license. Now, again, the same rule applies, make sure it is valid, i.e. it's not an expired driver's license. And B is make sure the address is correct. Again, going back to my point, is make sure data is correct. So if the driver's license is, addressed at some other place, but you're living some other place, it's vital that you get it changed. Not just for mortgages, but lawfully, I think you still need to change your license. Otherwise, you're risking, I think, what, £1,000?
Yeah, it's £1,000
Don't quote
fine.
me on that. I don't know that, but there's definitely some consequences of having wrong address on the driver's license. So those two forms are the most common acceptable forms that's needed. Then you need proof of address. Again, if you have a driver's license, that also acts as a proof of address because it has an address, provided it's a correct address, of course. Then you have your standard stuff, which is your council tax or utility bills, i.e. your gas, electricity, water bills. Again, same rule applies. Check your addresses, make sure they're in date. With utilities, it generally needs to be within last 3 months. Council tax is produced yearly, so the latest year or the current year running should be okay.
Cool. I think one thing I'll add as well is if you've not got a UK passport and you was born outside the UK, lenders might need to check your resident status. So they can often ask for your biometric residence card, which shows your resident status, or especially after Brexit, if you're European, you'll just be asked to provide a share code, which you can get again from government websites, and they'll just need that in conjunction with your passport.
Cool. Okay, the 4 points we've spoken about. So just to go over everything, so credit file, have a little look at your credit file, get it in order. You want to sort your deposit as well, savings, gifts, etc. Points we've touched on. Have a look at your bank statements, good conduct on there, etc. No fruity references. And then just make sure your documents are all lined up. So proof of income, self-employed or employed, points we've touched on as well. Even if you're starting a new job as well, we can still look at that too.
And make sure your address is correct.
Thanks, chaps. Hopefully you found that interesting and useful. If there's anything we can help with, please do get in touch. All of our information is below. Or you can find everything at www.residemortgages, all one word, .com.